QuickBooks Pro Desktop 2021 Budgeted Income Statement with the help of Excel. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're now going to be constructing a budget with the use and help of Excel. So we're going to be exporting a report from QuickBooks to Excel. We'll create the budget, and then once created, we'll enter that back into Excel, our QuickBooks here, so that we can do those comparative reports. So to do that, we're looking first at the income statement or profit and loss. If I go to the reports dropdown, we go to the company and financial, and we take a look at the profit and loss standard, changing the dates up top from 01/01/21 to 12, let's say 02/28/21. This is the 2 months worth of data that we have entered into our practice problem. Now, again, if you had a prior year data, then the classic way to think of the budget is to take a look at the prior year and then start there to think about the current year and take the prior year and break it down to a monthly basis. We don't have anything in there for the prior year. We're going to basically take this 2 months of data and kind of imagine as if it was for the last 2 months of the last year, as if it was last year, November and December. And then we're going to construct a year's budget based on that information so that when we put it back in the system, we'll be able to do the comparisons for the actual data, which is here, and the budgeted data reports from QuickBooks. So we could export just the profit and loss to Excel to start to think about this. But then if you do that, you get all these other kind of subcategories in here within our profit and loss. So what I like to do is actually go to the trial balance and export to the trial balance so that then we could just get I can trim that down more easily to just what I need. So I'll typically go, okay, let's go to the reports drop down and let's go to the accounting and taxes and take a look at the good old trial balance, the good old TB. And I'm going to take this for 2 months, a 2 month time period, which is going to be 01/01/21 to 02/28/21. There's our trial balance. Now, this, of course, includes the balance sheet information, which I don't need. I only need the income statement, which is from sales on down. But that's easy for me to delete in Excel. I can do that all in one kind of swoop. So I'm going to go ahead and do that. So I'm going to go up top and let's export this thing by going to the File tab. We're going to create a new Excel worksheet that we will export this trial balance to. And it's going to be in a new workbook as well. So I'm going to go ahead and export that, and then we'll make our adjustments, our budgeting adjustments to it. So here it is. I'm going to maximize this. Now, this is going to take some Excel formatting here that might be beyond what you want to do. If you just want to know how to enter the budget into the QuickBooks system, we'll do that in a future presentation, and we will provide you with this Excel sheet so you can use it for the data input at a later time. So just be aware of that. We're going to do some budgeting basically with the use of Excel here at this point. So I'm going to format this thing now. Let's first save it, make sure I don't lose it. So I'm going to go to the File tab up top. We're going to say Save As. Let's browse to see where do we want to put this thing. I'm going to put it on our desktop. It's going to go on the desktop. We're looking for the Get Great Guitars data file. I want the data file. And then I'm going to make a new section. We're on number 11 now, section 11. And so I'm going to say this is section 11 budgeting, something like that, section 11 data. And this is going to be, I'm going to double click on the section 11, and this is going to be the budget. So I'll call it the income. Let's just call it budget, because I'll put the balance sheet in there too. And let's say 2021. So I'm going to say save. Yes. There it is. Okay, now let's delete this first tab. Standard kind of stuff for our exporting. I don't need this first tab. I'm going to say okay. This is going to be the P&L or profit and loss or income statement. P&L sounds nice, sounds cool. So I'll put that there instead of the income statement. IS maybe. And then I'm going to say the second tab is the page layout. I'm going to say okay. Let's get rid of this view and the view screen Windows group. Get rid of the splits up top. And I don't really need these dates here, so I'm going to remove the dates. And then I'm going to go back to the first tab. So let's go back on, and I have to click off of the headers to show the first tab again. Back to the first tab. Okay, so now we're just going to clean this thing up. and then use it for our projection. So I'm going to do this fairly quickly here. So I'm going to say, I don't need these headers. I'm going to select rows 1 and 2, right click and delete the headers. And then I'm going to scroll down to the bottom and say, I don't need the total column. So I'm going to click on the total and delete the total column. So I'm going to delete those. And so I'll make this a little bit larger. I'm holding down Control and I'm making it a little bit larger. So I'm like at 130 now, so we might be able to see it a little bit easier. Now, if I scroll down, I don't need anything that's on the balance sheet. So everything that goes down through the equity section is balance sheet. The income statement starts here. Everything above it, ending at the equity and above, is going to be the balance sheet. So I'm going to delete the entire balance sheet. Don't need it. So I'm going to click on 23 all the way up. Right click on those cells and delete them. So there we have that. Now note the formatting here. I'm gonna try to format this entire worksheet. I'm gonna click on this little arrow, right click on the worksheet, format the entire worksheet. I typically like to see it currency, brackets, maybe negative brackets. I don't really need decimals because this is a budget, so I don't really need the pennies. And then I'm gonna say okay. So there we have that. Now also note that still this is at Arial 8. And if I click anywhere else, it's at Calibri or whatever, 11. So I want the whole thing to be the same. So I like Calibri and 11, or at least 11, whatever the font is. So I'm going to go over here and then I'm going to format paint that cell. So format paint it, and then I'm going to select the entire worksheet. So it says, hey, do the entire worksheet using that same formatting. There we have that. Then I like to make it bold, Home tab font group. I'll bold the entire thing too, just to make it a little bit stand out a little bit more. Now, normally, if I was to put this in terms of debits and credits, I would make the credits negative and the debits positive, meaning revenue would be negative then, and the debits or the expenses would be positive. However, since I just have the income statement, it's probably easier for most people to see all the expenses as negative. So I'd like to make all of the expenses negative so I can put this in one column and not have any complex formulas, just be able to use the sum function to add things up. So in other words, I want to make this entire row here, I want to make this entire row negative. I want to make all the expenses negative. So to do that, I'm going to select column C, and then I'm going to right click and copy it, and then I'm going to paste it special so it just flips the sign. I like to test it out somewhere other than on the cell I'm at in case I mess it up. So I like to go over here and say, okay, let's right click and make sure you're on the top cell or you won't be able to, you can't be on column or row 2 or it won't let you paste an entire column. So I'm going to say this is going to be paste. I'm going to paste it special, and then it's going to be special down here. So it's like super special, and we're going to be pasting subtract. And then I'm going to say okay, and it just flipped the sign, as you can see. So that looks good. So now I'm just going to copy this whole column and paste it over the top of these numbers just to flip the sign. So I'm going to right click and paste it, and there we have it. This column is no longer useful, so I'm going to select the entire column, right click and delete it. And then I'm just going to move the positive numbers over. So I can do that by selecting them, and then I can put my cursor on the side of the cell and drag it over. Or I could do it by right-clicking and cutting, or Control X. This is actually the same thing as dragging it and paste it over like that as well. So now it's all in one column. I can calculate the net income very easily, net income, by just using the sum function instead of using any more complex formula. The easiest function to use, the sum function. I just add it up, there it is. If I double check it on the income statement, going back to the trial balance, checking out the P&L, profit and loss, we're at the 6,076.18. Does that match out? 6,076, I removed the pennies, so it looks good. So I'm going to then make this black and white. Let's do that, and I'll make this black and white as well. So that's going to be the bottom line of this thing. Let's put an underline here. I'll just put an underline there. That looks pretty good. I'm going to remove column A. I don't need that skinny column there. I don't need the skinny column. I'm going to delete it. Don't need the skinny column C. I'm going to just delete that whole column. Don't need the skinny column. All right. Now this is going to be our starting point. Now we got this from January and February, but in practice you might get it for the entire prior year. I might start with my prior year's 12-month period income statement. How did we do for the 12 month? And then divide it by 12 to break out to what I think I'm going to start with monthly. And that would at least be the starting point. So we only have 2 months of data. and that 2 months was in the current year that we downloaded, but we're going to basically imagine that it was the last time period for January and or for like November and December. And now we're going to use the 2 months data that we're imagining was last November and December to project out to this year, January through December. Okay, so to do that, I'm gonna minimize. I'm gonna make this cell smaller. Now I want another skinny cell. Actually, after I deleted the skinny cell, and then I'm gonna add a row. I'm gonna put my cursor on column 1, right-click, and add a whole row, so that I can put my headers up top, which are just gonna be the months of January, Feb. So I just put Jan, Feb, and then I'm gonna select these two, and Excel will be able to use to autofill it across, because it knows that, well, you probably want like the next month after that. So we got January, February. It's because, and then I spelled it wrong, of course, so it's not doing it because I can't spell. So how about Feb instead of Fab? It's not Fab, it's Feb. Feb is Fab, but whatever. So we're gonna go through December, and then we'll have the total. And let's center these. And so we're going to say Home tab, Alignment, and Center. Let's make this black and white again, so that's our header. Okay, and then I'm just going to say that's 2 months of data there, so the starting point would be, well, 1 month you would expect to be that 1,500 divided by 2. That's what I expect to happen in 1 month, January, if that was 2 months of data. Then I like to, instead of copying this across and making this an absolute reference, and you'll see why, like, I could copy this across. I can't copy it across this way, right? I can't just go, let's copy that across, because then it's gonna move the cell. So let's do it. One way we can fix that is I can make an absolute reference here by putting my cursor in B2, selecting F4, $ before the B and 2. Then I can autofill this across. I can simply autofill across to December, picks up the same number. I can sum this up, and this would be the total then on the year. That's going to be our starting point. So I'll do that for a couple different cells, and then that'll be our starting point, and then we'll adjust that for some of the items. So like the guitar, same thing. I'm just going to do this all the way down. I'm going to say, well, our starting point would be that's 2 months of data, this divided by 2, and then I'm going to make this one an absolute reference, B3, by selecting F4, $ before the B and 3, enter, and then autofill that across, and then we'll sum up the total. And so I'll do this again one more time, and then we'll do it using autofill faster. So this one would be the 40 divided by 2. I'm going to make this 40 an absolute reference, B4, hitting F4 on the keyboard, $ before the B and 4, enter, autofill this across, autofill. Then I could copy this down, autofill this way, because that's just copying the sum function. Okay, and then I could just copy this one down, but I can't really do it because it's an absolute reference. So let's take a look at an alternative we can do. I could say this is going to be equal to that 6680 divided by 2. And then instead of making this an absolute reference, I'm just going to go into February and say this equals the prior month. And by doing that, I can autofill this across. I can autofill this down, and everything just equals the prior month. That way, I can then copy this down. And it'll pick up the next month. And then I can do the same thing here. I could copy this down, and it'll be picking up the prior period. And then I can copy this across. So now these are the expenses, but same concept is happening here, right? That's the expense for 2 months, so we divide it by 2, and this would be the expense for each month, for monthly. So if I copy this down, then if I just copy this all the way down, this would be our starting point. I'd say, let's just copy this down. There we have that. Let's copy this down, which is just going to be equal the prior cell. So these are all the same now. And then I'm just going to copy this across. I'm going to select this whole thing, copy that across, like so. And then we'll copy this total column down. I'm going to copy this down. And there's basically our budget. And so then we're going to have the net income. I'll say is here. I'm going to paste that, summing this whole thing up. I paste it so we get the formatting, and then I'm just going to copy that across, and boom, there we have it. So that's going to be our projection. This total column, to double check it, should add up this way, and if you added up these items, let's just do it underneath. If you added it up this way, equals the sum of these, you should end up with the same number. So there we have it. We'll make that black and white. I kind of like putting brackets in our, put in a border on our whole thing. So I typically will highlight this whole thing and put home tab, font group, a border around the whole thing, like so. So that's our starting point, but we probably want to vary from the starting point. So we might say, hey, look, I think that some of our revenue accounts will be increasing over time. So then you want to kind of go line by line and say, okay, equipment rental, maybe that's my starting point, but I think it's going to go up, like by 5% each month as I advertise more. I'm hoping this will go up 5% each month. So maybe after January, maybe then I'm going to say, okay, well, I think in February, it needs to be equal to January's number times 1.05, 5% increase or 105%, right? 5% increase plus 100%, 105%. And so it would look like that. And then I can just copy this across and say, well, if I copy that across, it increases 5% each time. It's just going to take the prior cell and increase it by 5%. So we can take that all the way across, and it'll keep on increasing it by 5%. And so we could say guitar lessons. Let's do the same thing here. Let's say we think it's going to increase by 10% each time period. So I can say, all right, this is going to be the prior times 1.1. We think it's going to increase by 10% each time. So I'll copy that across, and there we have it. And then possibly the sales. Maybe we don't think that's going to increase by 1%. Maybe we think it's going to increase by just one amount, like $1,000. So let's say we think it's going to increase by $1,000 instead of a percentage increase. So I'm going to say, well, I can take the last one plus $1,000, and then if I copy that across, we think each month we're gonna earn another $1,000, and that's how we're gonna increase it. We think we can increase sales by $1,000 over the prior month each time. And then the service revenue, let's keep the service revenue as what it is. We might say that, we'll keep that one where it is. Now the cost of goods sold, then you would think would be increasing with relation to the sales price, because the sales is the merchandise that we sell. So that means the cost of goods sold should be a percentage of the merchandise. In other words, if I look at this percentage wise, I can say the cost of goods sold right now, if I divide the cost of goods sold divided by the sales and make it a percent and make this a little bit larger, it's 78%. So the cost of goods sold is 78% of the sales. So let's make it just 80% of sales basically. So I can say, all right, well then let's take the sales times 0.80%, and I got to make it a negative. I'm going to say negative sales times 0.80%, because we're saying that it always it's always 80% of the sales price, meaning the cost, we have a 20% like markup that we would have. So that would be the profit margin. So you would expect a relationship like that to exist if you sell inventory, because that's going to be how you price in your markup for the cost of the inventory. And so then I'm going to copy that all the way across. I can copy this all the way across, and it'll always be taken up the sales line times 80% will be the cost. Now, when we get to QuickBooks, it might not be so easy for us to enter that, because there's not going to be a relationship between sales and this number that we can put into the QuickBooks system as easily. So we have to either manually put in each number, or possibly we can do some formula like this. So I can say it's the prior cell minus $1,000. That's our increase, because we increased the sales 1,000 each time, times 0.80%, 80%, and that would be our increase. If I copied that across we should get to the same result here. And that'll make it, that's what we'll have to do in QuickBooks, or just manually input it. In other words, we still have the end of the day. If I was to take the total divided by the sales, we should still have a percentage of that 80%. Okay, so that's typically the relationship with cost of goods sold. Now the bank service charges, we might say, hey, look, even if sales increase, I think the bank service charges will basically be the same. So I'm just going to copy that across. And many of the expenses might be fairly straightforward like this. We can just simply copy them across. The depreciation, again, if we don't think there's going to be any purchases of equipment, we may just be able to copy the depreciation across. If we expect to make any purchase of equipment, then we'd have to periodically say, okay, this is when the depreciation is going to be increasing when we purchase this piece of equipment in the middle of the year at some point. So that would impact depreciation. And then we have the insurance expense, same kind of concept. If we're using an accrual basis method, then whenever we purchase the insurance, we expect it to be allocated monthly in a similar fashion as the prior year. So unless we need more coverage, we would expect on a monthly basis it to be basically the same, so we can kind of keep it the same all the way across. Interest expense, again, it would be somewhat the same unless we had another loan. Note interest kind of goes down each month, but by a little bit, right? Because we pay a little bit, our payments will consist of a little bit less interest versus principal each month. But it's pretty similar. So unless we're going to take out new financing or change, or the loan's going to be paid off sometime in the middle of the year, then our interest will be somewhat similar. So I'll just keep that the same. Plus it might be somewhat immaterial. Miscellaneous expense, same kind of thing. We don't even really know what that is, but it's usually a fairly small number, or it should be. And so we'll keep it the same each month. So keep it standard. Office supplies, similar kind of concept. We would expect to use the same office supplies each month, unless we're growing to the point where we're going to need substantial more office supplies or something like that. And then payroll expenses, again, we would expect that to be basically the same, unless if you had something like hourly services and you had a seasonal business, then you'd want to get a lot more into detail on payroll. We won't get into the budgeting on that. There's a lot of budgeting information that you can think about with regards to the payroll service and how you might want to deal with that if you had different seasonal business. And then the telephone expense, again, we would expect it to be reasonably the same each month. So we'll keep that across. Same with the utilities. So we'll just expect that to be reasonably the same. And then the gain or the loss on investment. This is something that we might say, hey, that really only happened like one time. Maybe this is something that we don't expect to happen at all anymore, right? Because that's not a normal thing that happens each month. That's why we put it at the bottom. So I might just say this is something that I'm just going to delete altogether. I don't think that's going to happen again. And then the interest expense, the last one, this was the internet expense up here, sorry. The internet expense we're going to keep the same. And then again, the interest expense, as I talked about up top, will be, you would think would be somewhat the same as well as we discussed up top. So that's where we'll stand here. Now, again, you could spend a whole lot of time kind of figuring out what you think the best budget will be, but that's kind of the basis of what you'll start off with. And again, I think that'll be easier to do in Excel. Next time, we're going to take this and we're going to enter this information into QuickBooks. And as we enter the first 2 months, since we're into the budget and we already have the actual information, we'll be able to run reports for budget versus actual information, and then see how you can keep the budget going forward for the 12-month time period. So that's why you'd want to kind of enter it into the QuickBooks system to be able to generate those reports, even though I think it's easier to actually construct the budget with the use of a spreadsheet program such as Excel.